Welcome, everyone. Thank you for joining our working group meeting today. We have 2 hours. We're going to spend about the first 30 minutes hearing from one speaker. I'll tell you more in just a moment. And then we have about 90 minutes, I think, left after that. And we're hoping to get into 2 of the 5 requests that are in the legislation. Again, we'll tell you more about that when we get there. As you see on the screen is the etiquette slide. As you have seen these before, we are just asking and reminding each of us to use this as we embark in today's conversation. Deanne is going to post a link to the working group website into the chat for your reference. Lots of stuff there, and if you haven't visited yet, that hopefully will answer a lot of your questions. We are live on TVW, and this meeting is being recorded. You will be able to see the recording in the workgroup website, as well as the other recordings if you want to go back to any of the other conversations. Thank you for your input for survey number 6. That will soon be available on the workgroup website. There is no survey for today, and so more to come, and we'll get more information from you in the future. So with that, let me stop sharing. And Commissioner Up the Grove, are you with us? Yes, I see you.
Yes. Thank
I
you.
would love to hand over to you to introduce us to Dr. Gelman, please.
Thank you. First of all, I apologize for not being there in person and able to stay very long. We're out at the Bear Gulch Fire out on the Olympic National Forest right now, as our fabulous DNR employees are working to get that fire out. But this morning, I'm really pleased to be able to welcome Dr. Jacob Gelman, who is an assistant professor of applied economics at Oregon State University. Dr. Gelman earned his PhD from UC Santa Barbara, where his research focused on the economics of wildfire. And his current work explores how wildfire risk and perceptions of that risk affects housing markets, insurance availability, premium pricing in high-risk areas. He has studied how insurers respond to increased fire risk and how policy design can balance market stability with consumer protection and climate adaptation. And so Dr. Gelman brings an evidence-based perspective on how insurance markets are adapting or failing to adapt to growing wildfire exposure, which I thought made him a valuable voice for our discussion today. And in full disclosure, I consider him a friend and a valuable resource in this area. So I hope you'll join me in welcoming Dr. Jacob Gelman.
Thank you, Commissioner. Dr. Gelman, over to you.
Thanks very much, Commissioner Up the Grove. It's a privilege to be able to provide any insights, and I hope I can be helpful today. So the goal of this talk is to give an overview of what economists say about wildfire risk and homeowners insurance, both in the Western United States and in Washington specifically. So Commissioner Up the Grove gave a great introduction. Just to piggyback on that, a bit about me. I'm at the Department of Applied Economics at Oregon State University. My research is focused on climate risk in homeowners insurance markets, wildfire and climate impacts on public lands, wildfire smoke, as well as fire ecology and fire weather. I hold a PhD from the University of California, Santa Barbara. And on a personal note, I previously lived in Washington for about 23 years. So first off, I think it's helpful to define some of the features of what makes a healthy insurance market. So some of these features include risk pooling and diversification, competition among insurers, consumer access and affordability, insurer solvency, prices that accurately convey risk signals, and transparency and oversight. Now, almost all of these features of a healthy insurance market are being put to a stress test in many states across the country. So we're seeing increasing losses from climate-driven natural disasters and increasing frequency and severity of these losses. And this is important because property insurance markets have a critical role to play to help individuals reduce their exposure to climate or wildfire risk, and to help businesses and households recover from natural disasters when they do strike. But to do so, firms need to be able to set prices that accurately reflect wildfire risks. Now, insurance companies face some challenges in pricing risk in these markets. One is that natural disasters like wildfire are infrequent and difficult to predict. So, especially compared to losses in, for example, the health insurance or the auto insurance sectors. A second challenge for pricing risk is that natural disaster losses or risks are correlated among insurers' portfolio of assets. So if a wildfire strikes one house, it's likely to strike many other houses nearby. A third challenge for pricing risk is that regulation can limit the way that insurers can set adequate prices or use catastrophe modeling to set forward-looking prices in certain states. A fourth challenge for pricing risk is that these markets often have incomplete or asymmetric information, both on the part of property owners and between insurers. We'll get more into that. So I've organized this talk around 4 questions about wildfire risk and homeowners insurance. The first question pertains to trends in Washington. The second is about risk pricing and regulation in various states and Washington. The third is about defensible space and home hardening. And the fourth relates to insurance adequacy. So question 1 is, where is wildfire risk and insurance stress high? Or I guess maybe I should say, where could insurance stress become high potentially in Washington? So in general, wildfire exposure is highest in Eastern Washington. So what I've done here is just mapped out the proportion of homes in either high or very high wildfire risk categories, according to CoreLogic. And what we see is that wildfire risk exposure is highest in the Cascades and northeastern parts of the state, along with near the gorge. These patterns look even stronger if we look at a zip code level, where in some zip codes, more than 50% of houses are in high or very high wildfire risk categorizations. These are the same parts of the state that are projected to grow in wildfire risk over the coming decades as climate change intensifies. Now, how does this pertain to insurance? It's helpful to look at some broad trends in the insurance industry. So what I've done here is I've plotted at a state level homeowners insurance profit as a percentage of premiums since 1985. So all of the other states are in gray here, and Washington is in blue. And what we can see is that since 1985, homeowners insurance profit has been relatively modest. And again, this is at an aggregate state level in Washington state. So the state so far has not seen a catastrophic loss year on the order of like Hurricane Andrew in Florida in 1992, or Hurricane Katrina in 2005, or the Lahaina wildfires in Hawaii in 2023. But if we look just to the south in California and Oregon, we can see that just a few natural disaster loss years can erase years of profit. So California had the 2017 wine country fires and the 2018 Camp Fire, and Oregon had the 2020 Labor Day fires. So it can just take a few catastrophic loss years to start causing some problems. And I don't have the 2025 data, or else we'd see the Los Angeles fires jump off the chart here. So in terms of where these problems are manifesting, we're seeing a higher number of insurance non-renewals in disaster-prone parts of the country. And what I mean by non-renewals is insurance companies dropping homeowners from their policies. So this is especially acute in Florida with hurricane risk and California with wildfire risk. So zooming in on Washington, we can see that the places that are experiencing non-renewals is almost a perfect overlap of the high wildfire risk areas that we mapped earlier. Question 2. How do regulation, risk pricing, and availability vary across states? And where does Washington stack up in this? So in general, natural disaster risk pricing is a result of each state's unique regulatory framework. So states place different rules and regulations on setting insurance premiums. And this can be relative to natural disaster components like catastrophe model disclosure requirements or the way that catastrophe models can be priced into rates. There's also, of course, many other non-disaster components like claims history restrictions or the ways that insurers can use household characteristics to price insurance. And all of these differences result in different lengths of review processes in prior approval states. So there's some research out currently from economists at the Federal Reserve Board that are categorizing states as either high regulatory friction, so many more restrictive requirements, longer review processes, or low regulatory friction, like lax processes for setting insurance premiums. And what they do is they plot the relationship between insurance premiums and natural disaster risk in restrictive versus lax states. And what they find is that in regulatorily restrictive states, the relationship between insurance premiums and natural disaster risk is flatter. So this says that in highly regulatorily restrictive states, natural disaster risk is underrepresented in insurance premiums. On the other hand, in more lax states, they find that natural disaster risk is overrepresented in premiums. So essentially, the findings of their research is that insurers cross-subsidize natural disaster risk between states. So they set higher rates in lax states to compensate for lower restricted rates in high friction states. And these cross-state distortions can increase insurer exits from highly regulated states, which is, I think, an unintended outcome of well-meaning consumer protections. So where does Washington stack up in this? There's some related researchers by economists at the Federal Reserve Bank of Philadelphia. This is a super messy chart because they're also studying credit scores. So if you just ignore the color differences in this chart and look at the point estimates, if we examine Washington, what we see is that there is less than a one-to-one pass-through of disaster risk into insurance premiums in Washington state. What this means is that disaster risk is currently underrepresented in Washington state homeowners insurance premiums as of 2023. Now, we talked a little bit about some of the state regulatory frameworks, but in addition to that, there are also competition dynamics. So differences in wildfire risk pricing between insurers can affect affordability and availability. So this is some of my own research in California with co-authors. And what we find is that insurers vary in the granularity of their wildfire risk pricing. So some insurers price wildfire risk at a relatively coarse level, at a zip code level, or essentially zip code. Some insurers are a little bit more granular using these categorical risk scores like CoreLogic's wildfire risk score or Verisk's fire line score. And some insurers are even more granular than that using like mapped grid cell level wildfire risk. And some of the findings of our research are that firms that use more granular pricing can cream skim the low risk homes in otherwise seemingly high hazard areas. And to compensate, firms that have less granular risk rating strategies charge higher prices in high risk segments, or they pull out entirely. So a takeaway of this research is that improving insurer usage of wildfire risk rating information can increase competition and availability of insurance, which can help bring premiums down. So California's had some of the most severe insurance issues, and some trade groups, and I'm not saying this, but many are saying that part of the result of these insurance issues stems from California's challenging regulatory framework. So in particular, in California, average rate increases for homeowners insurance premiums that exceed 7% can trigger costly public rate hearings. So if you look at the way that insurers request rates, it's a prior approval state. they're almost all asking for 7%. So it seems like this regulation has been binding for insurers. The state also sets cap model restrictions for setting overall rates. Now they can use cap models for setting relative rates, but so many private companies have pointed at these regulations as being a major problem. In spite of that, I think it's worth looking at the things that California is trying to do to alleviate some of these problems in its insurance market. So this is Commissioner Ricardo Lara, is a statewide elected official in California, and he's leading what he calls the Sustainable Insurance Strategy reforms. So under these reforms, California is going to provide a carrot to insurers where they're going to be allowed to use catastrophe modeling and price reinsurance in their rate filings. They're also going to have a stick. So in order to get the carrot, insurers have to write at least 85% of their statewide market share in wildfire distressed areas. So it's an interesting multi-pronged approach to try to improve risk pricing in insurance while also increasing availability. Concurrently with that, in an effort to improve disaster risk information, they're having a development of a public catastrophe model led by Cal Poly Humboldt researchers. So it's going to be similar to Florida's publicly available hurricane catastrophe model. They're also pre-approving use of private industry catastrophe models. The first one that's been approved is Verisk's, and others in the queue include Karen Clark and Company, CoreLogic, and RMS. So broadly, what some of the economics research has found is that policies to improve insurer usage of information, however you achieve that, whether it's through public risk models or lower restrictions on cap model usage, these types of policies are predicted to lower average prices and increase insurer participation. Some economists have argued that restrictions on cap model disclosure details, I should say, can act as a barrier to usage. I think it's important to consider also the equity aspects of this. So it's important to send the right risk signals through insurance prices, but more granular risk pricing could create burdens for higher risk properties that could fall on socially disadvantaged communities. So I don't know the exact answer to that, but I think it's something worth studying in setting any policy. A last point that I'll make is that having multiple catastrophe models can help reduce uncertainty. You know, every company or every public model has their own in-house method. But what some of the research has found is that catastrophe models might correlate in relative terms, but not always in absolute terms. And so having multiple models can reduce uncertainty. In California, for certain perils, insurers will average together results from multiple models. So that's a bit on risk pricing. Just to get into defensible space and home hardening, this is question 3 here. We'll see if we can get to question 4 as time allows. But this question says, what are the benefits and costs of defensible space and home hardening? So I think one of the foremost researchers in this area has been Alexandra Seifert, who's a researcher in San Diego. So she has what I consider one of the landmark studies on defensible space. And she and her co-authors looked at wildfires in San Diego over a 10-year period and compared the probability of survival of a house as a function of defensible space, I should say. So these are pretty coarse categorizations that they gave. But what they found is that moving from 0 to 25 feet of defensible space to 26 to 50 feet of defensible space resulted in about an 11 or 12 percentage point increase in the probability that a house would survive. Again, these are pretty coarse categorizations. In follow-up work, they found that zone 0, so 0 to 5 feet of defensible space, was the most critical for structure survival, but that protection benefits rose over the interval of 15 to 66 feet. I think another interesting aspect of their follow-up research was they found that home hardening was more important in explaining structure survival than landscape level defensible space. So for example, enclosed eaves, vent screens, and multi-pane windows explained more of structure survival probability than landscape features. So again, looking at California, not everybody wants to be California, nor should they be. But I think it's interesting to see what other states are doing. So as part of these reforms, Commissioner Laura is leading the Safer from Wildfires framework, which is going to require that insurance companies give discounts to homeowners for home hardening and defensible space. So this is an interesting way that they're using the private market to try to improve D-space and home hardening outcomes. Some other policy types that are happening in this state and others include mandatory requirements. So this is a more blunt tool where governments can just flat out require defensible space clearing. Now, if you're going to do something like just a straight up mandatory requirement, you have to also think about enforcement. So this journalist at the San Diego Union Tribune found that over an 8-year period, CAL FIRE inspected over 128,000 properties, but rarely issued citations for defensible space violations. So enforcement is a critical part of mandatory requirements. Lastly, we saw a great presentation from CAL FIRE's Community Wildfire Preparedness and Mitigation Division, where we saw an example of a state that's giving grants for local projects focused on vegetation management, defensible space, and home hardening. So just looking at some of the economics literature evidence on home hardening, this is one of my co-authors, and he has separate research that is forthcoming, but he studies California's wildfire resilient building codes. And what they find is that these building codes have been a tremendous success in terms of cost savings. So the background on this is that in 1991 and 2008, California issued mandatory wildfire resilient building codes in state responsibility areas. Then they also allowed for optional implementation in local responsibility areas. But these included first roof requirements, and then they gradually added requirements on eaves, siding, vents, windows, etc. And what they found is that homes that were subject to these building codes were dramatically less likely to be destroyed during a wildfire. They also found evidence that wildfire resilient building codes reduced house-to-house fire spread. So there are kind of these positive external benefits of mandating building codes. Overall, they quantify that there are strong economic benefits for building codes in new home construction. But what they find is that in California, at least, retrofitting existing homes is only economic in extreme wildfire hazard areas. So in terms of what the Northwest is doing, I think a lot of the people here know much better than I do. But in Oregon, right now, there's ongoing work to implement wildfire resilient building codes for new construction. It's been subject to some political disagreement. So in just this summer, the Oregon wildfire hazard map was repealed due to concerns about insurance premiums, policy availability, and most importantly, model accuracy. So that's kind of an ongoing attempt at a similar policy as California. Washington also has the wild and urban interface building codes and development of hazard maps that are ongoing. So I'm not sure how I'm doing on time, but this last question is going to be a really quick one. Are consumers adequately insured against natural disaster losses? Question 4. So in general, what economists have found is that homeowners do not hold enough insurance relative to the replacement cost of their homes. And this underinsurance is strongest among financially vulnerable households, especially those with lower access to credit. So in terms of where Washington ranks, this is, coarsely at a state level, but in the bottom half of underinsurance across the country. Some findings from the literature are that underinsured homeowners are less likely to rebuild after a natural disaster, and they're more likely to relocate to other places. Some findings from the literature are that, in general, underinsurance is driven by a lack of consumer knowledge. So homeowners appear to rely on insurer estimates to set adequate coverage levels. And it turns out that insurers have differential ability to predict the replacement cost of homes because insurers are all using different models. And what this results is sometimes homeowners being underinsured. So it appears that homeowners shop on premiums without paying attention to more complex coverage features, such as extended replacement cost coverage. Some policies that might address transparency and coverage adequacy include increasing information for homeowners. So California Department of Insurance, for example, has an online coverage comparison tool, which allows homeowners to very directly compare features of contracts for homeowners insurance. So this can help assure that homeowners have good information about setting adequate levels. Another potential policy that economists have mentioned is publicly accessible rebuild cost calculators. I'm not sure I've seen this implemented, but it's a way that we could try to improve information about how much coverage is enough. Colorado has an example of some legislation intended to address underinsurance, where insurers are going to be required to offer extended replacement cost coverage, extended replacement cost policies of greater than 50% of dwelling insurance. And then the insurance commissioner there is also going to produce an annual report on reconstruction costs. So I think I'm over time, so I'll just turn it to discussion and say, thanks for having me, and I hope that anything that I've said has been helpful in these discussions.
Thank you, Dr. Gilman. We have just a couple minutes, so let's see. Senator Short, you have a question or a comment?
Thank you so much. And Dr. Gilman, really appreciate your presentation. So with what you mentioned on the existing structures, retrofitting only made the most sense in the highest risk areas. Can I ask you then, is the landscape level protection, the vegetation management in those areas where maybe the home hardening doesn't make sense, does that still add value?
I think if you look at the work from Alexander Seifert, it's certainly adding structure protection. I don't think that, to my knowledge, there's been a study on the economic benefits. So I don't think there's been a study directly looking at the costs and benefits. Definitely, though, is providing structure protection.
Thank
you. Any other questions or comments for Dr. Gilman? All right. Thank you so much, Dr. Norman, for being here with us and sharing. All right. We are going to turn our attention to the legislation and the 5 requests. I'm going to hand it over to David to recap what those 5 pieces are that we're working on and talk a little bit about the process for what we're hoping for today, and also in the future, how we're going to come to the overall recommendation. So David, over to you. Wait, David, come off of mute though.
Yeah. Thank you, Kelly. Hopefully my screen is visible now.
Yep, we can see it.
Good morning, everyone. So for the past series of work group meetings, staff have tried to provide content relating to the 5 assignments the legislature is requesting a recommendation on. This is that section of the bill, subsection 3. If you'd like to read the full bill, a link to Senate Substitute House Bill 1539 is on the work group's webpage. So as we enter the next series of work group meetings, we hope they will help start to determine what recommendations should look like. And to be clear, we're not asking you to record a vote or make any final determinations right now. We hope that these discussions really kind of help the work group move forward to shaping what we as staff can bring back to you in September and October, so you can develop your final recommendations then. So for today, we're going to hear feedback on items C and D. And then on August 19th, we're going to be discussing A, B, and E as they interconnect on discussions around nationally recognized science-based mitigation standards, how to align, coordinate, promote them, and then what a grant program using these standards could look like to help the insurance market. So happy to answer any questions on the intent of the next couple work group meetings.
So before we dive into, we're going to start with D. Does anybody have any process questions for David? Okay. So I'm just going to copy the text from Dee in case that's helpful for you. It's in the chat, so if you want to refer back to it. And Lauren Burns, I'm going to hand to you to remind us what we learned in the July 15th meeting.
Great, thank you so much. And I'm going to paste the meeting summary in the chat. And again, this is found on our work group website if you'd like your own copy or more materials. So again, we're a little short on time today, so I'm really only going to focus on common themes and challenges identified. And I will share screen real quick. All right, and hopefully you can see one
Can't
of the
see it yet,
screens.
Lauren.
Okay, thank you. All right, you should
Now we can
hopefully,
see.
great,
Yes.
thanks. So you should hopefully be seeing the July 22nd meeting. And, oh, sorry, we want the 15th. Got ahead of myself. Okay, there we go. So common themes and challenges identified from our July 15th meeting were wildfire risk modeling complexity and transparency. There was feedback on the presentations highlighting advances in wildfire risk and catastrophe models, but there's a strong call for greater transparency to consumers about how wildfire risk scores are calculated and used. There were also comments around industry insurance challenges, insurers facing difficulties in high wildfire risk areas with concerns about insolvency, regulatory impacts, and reluctance to write policies in those zones. We also saw comments around importance of mitigation and local fire response, many respondents emphasizing the critical role of community, local, regional, and state fire response efforts in reducing wildfire risk, which can be underrepresented in models focused on property level risks. We also saw use of technology and data. There's interest in aerial imagery, machine learning, and granular data, but concerns around consumer protections, data accuracy, and the ability for consumers to challenge or understand scores. On consumer engagement and education, respondents want simpler, clearer communication so homeowners understand their wildfire risk and mitigation options. On collaboration with government and communities, there were questions around how risk modelers and insurers work with government entities and communities to identify high-risk areas and implement mitigation programs. On potential for incentives and reforms, there was discussion about regulatory reform and incentives to encourage insurers to remain in wildfire-prone markets and for homeowners to harden properties. Some key challenges that were identified in the feedback that we had received was on transparency and accountability, lack of consumer access to individual wildfire risk scores, and skepticism about insurers' willingness to share this data. On insurance market accessibility, there was reduced availability of insurance in high-risk areas due to risk and regulatory concerns. Regarding model limitations, models may inadequately factor in local fire suppression effectiveness and community mitigation efforts. On complexity for consumers, there was difficulty identified simplifying technical risk models for public understanding and decision-making. On data privacy and accuracy, there were concerns about aerial imagery use without sufficient consumer protections or ability to correct errors. On aligning risk mitigation and insurance, there were challenges in linking mitigation programs to improved insurance availability or reduced premiums. And lastly, related to handling of wind and fire behavior, there were some questions about how changing wildfire behaviors, especially wind-driven fires, impact risk and modeling. So again, that was just a summary of one of our meetings. Definitely section D that we're looking at today, it was relatively omnipresent in several of our meetings. So for now, feel free to take a look at this document, but I will stop sharing for now and hand it back.
Thank you, Lauren. Helpful to recap. We thought as we start each of these, the discussion about each of these 5 sections, one, we're going to, as much as we can, try to keep each of the 5 separate. We know there can be overlap, but we thought it would be less confusing. And secondly, we wanted to begin by asking you at a high level for this section, looking at D, which is also pasted in the chat, you can see it. What do you most want to see in the recommendations specific to this section D? So take a minute, scroll up in your chat, reread section D if you need to, and then if you could put your comment in chat, this will help the staff that will be creating the recommendations to make sure we understand most important things, and then we're going to invite some conversation about this. Thank you for these comments. Okay. You may still be typing your answer to what you most want to see, so feel free to keep doing that. I see that we have a hand up in our attendees, Nathan Craig. Deanne, can you allow Nathan to be able to come off of mute and share the question or comment? Nathan?
I was just trying to tell you I couldn't see anything on the screen. That's all I was trying.
Because you are not a panelist, and so I'm afraid this is the way this meeting has been set up, that the chat is coming through to panelists, not coming through to everybody. You are correct about that. I don't know that we're going to be able to solve that right this minute, but David, let's take that one offline if there's anything we can do to make this visible for folks. Let's see. Melanie, I'm not sure if I'm pronouncing your name correctly. Do you also, it looks like you have your hand up as well.
Yeah, thank you. I did. I actually really, because I had the same concerns, I'm not sure if this is really a good open public meeting if we can't see anything that the deciding group is talking about. So if there is a way that we could get access to the chat as a summary after the fact, or, a copy of it or something, I think that would be really great.
Yeah. David, can we, I don't know if you can answer that
Easy to
question
do.
right now.
Easy
Is that
to
something
do.
we can? Okay.
Yep.
So we'll be able to post on the working group website the summary of the chat, I think is what it's called. So folks will be able to see it. Is that the right way to say it, David?
I think so. Yeah, but we'll make sure it's available.
We'll make sure you can get it. Okay. Nathan and Melanie, thank you for sharing. Okay, so I want you to take a minute, and we had 4 questions that we wanted to open as a poll. Deanne has a poll for us. Again, this is going to be visible and votable on by those that are panelists. So you'll be able to see the information when we share the results for those that are attendees. Deanne, can you open up the poll for us, please? These are 4 questions to get your input. We made it very simple. Yes, no, or unsure. And then once everyone has answered, then we'll make it visible so you can view the results. I should say this is a poll, so it is a vote in that sense, but it's not an official vote of any sense. This is just helping us get more information and hopefully helping drive our conversation here in a couple minutes. Deanne, I cannot see the poll.
It is open and answers are populating.
Okay, so you may have to click into the polls and quizzes section if it's not popping up for you. So in your toolbar, for me, it's at the bottom of my Zoom screen, but I think it depends on your browser. Then you can click into the poll. You should see 4 questions and these yes, no, unsure answers for each.
Kelly,
Yes.
this is Chandra, and my poll is saying hosts and panelists cannot vote. It's not letting me vote.
Mine as well.
Interesting. All right, some of you are voting, so that's strange. Deanne, can you help me with the technology here?
Yeah, I will double check. It shows on my end the capability to vote. Let me go back in and double check.
You're right. Some people are definitely been able to vote, but Chandra, I appreciate that I'm not sure.
Yeah, I wasn't this Senator Short. I wasn't able to vote unless we're not supposed to.
Nor was I.
No, you are supposed to. Technology. We love it when it works. And all right, how about this? I'm gonna paste the 4 questions
Kelly,
in.
so I'm going to end the poll and relaunch in a few minutes.
Okay.
Okay.
And then it should allow everybody to vote at that point.
That's what we're going to attempt. Yes, I love technology today. We're working on it.
Okay. All right. So we'll let Deanne work on that for us. While we wait for you to be able to give your input, I'm going to put these 4 questions into the chat. So if you couldn't see them, you will know what we were asking about. And maybe someone has a comment on one of these, or maybe you've seen something in the chat that you want to comment on. Chandra, I see you have your hand up. Is that left over from before, or do you have another question or comment?
Oh, sorry, that's a legacy.
Okay. Perfect. So we want to invite your comments, your questions. Who would like to get us started? Perhaps you have a comment from something you've seen in the chat, or you want to expand on what you've said here, or about one of these poll questions. Chandra.
So I'll go ahead and just make a comment while we're organizing the poll. So given our experience in the last couple of years since our large fires in 23, one of the issues that keeps coming up for us is questions about whose responsibility all of this mitigation actually is. And so I think anything that we put out, while we're obviously addressing, private property owners and, more specifically homeowners in high risk areas, I think we do also need to address public property owners and businesses that own wide swaths of fire or risk or property that's at risk for wildfire, because the public's assumption is that someone is telling people what to do and they're just not doing it. And so I think we need to be able to communicate across all of the various sectors, not just limited to private property homeowners.
Thank you. Michael DeLong.
Yeah, this is Michael DeLong from the Consumer Federation of America, Consumer Advocacy Group. We strongly agree on the importance of those mitigation as well, and communication is important to property owners. They should be advised about how the insurance industry considers their wildfire risk, and Washington considers how Washington considers it, and also local government. But it needs to be done in a very clear and relatively short way. If you have documents that are like 40 pages long and written in impenetrable language that the average person needs a lawyer to understand, it won't help at all. So maybe like 1 to 2 page graphics, maybe for each of them. This is how the insurance industry considers your wildfire risk. These are the reasons why your wildfire score is this way. Here are like concrete ways like that you can do to try and reduce your risk, ideally with some sort of graphics, because that engages a lot more people than like very, very dense text. So
Thank you very much. Senator Short.
Thank you. Just great discussion. I think, and I may be getting a little ahead, so let me know if I am.
That's okay.
I think also all of the things in the chat are good, but I also think we've got to do, what's doable. What's doable? Are there levels that people have the ability to do? Great discussion on, the home hardening or whether the veg management, there are a lot of areas in the state of Washington, including my district, that are, have older homes. And so I hope we're not trying to look at a one size fits all thing, and making sure that there are doable things that homeowners and other property owners, all property owners, can look at in a way that helps. So
Thank you. Patrick, I do not know how to say your last name. Will you help me?
So it's even better. It's not Patrick.
You're not Patrick. I'm sorry. Did I read it wrong, or are you
Um,
using someone else's login?
I'm using Patrick Tanaskett as our natural resource chairman, but my name's Cindy
Okay.
Marchand. I'm also from the Colville Confederated Tribes Business Council, and I'm his vice chair, previous natural resource chair. And so I'm just sitting in for him, and but we all go over this. I just wanted to echo what Senator Short had said about the Colville Tribes also thinks there's needs to be clear measurements for these defensible spaces or these things that we need to do to our homes. Because when is enough enough? When is there going to be a clear understanding of kind of the consumers receiving these benefits as far as their premiums go? So are we going to see those reduced premiums due to all the work we're putting into doing defensible spaces and getting new windows and doing things like that? Also, I wanted to add for the Colville Tribes, with us being a sovereign nation, we do have construction codes. So I think anything that happens for our fee landowners on the reservation, they go by our codes. we need to be consulted about that so we can make sure that we're in alignment with our codes and what's going on in the state, excuse me, the state of Washington. So even taking that into consideration, but I'm agreeing with everything that everybody's saying here, that, you know, we just need more transparency on this.
Thank you, Cindy. Tony Craven.
I do agree that there does need to be a short document sent to the homeowners, but we also need the data that they're using, i.e. flame lengths and other data, because I work with hundreds of homeowners every year, and I'm trying to figure out how to help them. But when I just have a risk score and it has some general information, I can't design treatments that will meet the standards that the insurance companies want. If you tell me what the flame lengths I got to manage to, I can develop pruning heights, space trees if I need to, but I can design things to do the mitigation. But without that information, I can't do that. I just look and go, oh, they said it was high fire risk. I bring pretty much the leadership in fire and aviation in the state out to an area, and they go, yeah, I have no clue to why that's rated high risk. And, but if we had the information on that, there's some meaningful differences. And then the other thing is, somewhat this is going to be different in different parts of the state. The sagebrush lands burn differently than the forested areas. And we all know Western Washington's different than Eastern Washington.
Thank you. Says Patrick, but I think it's Cindy, if my memory is serving me.
Cindy again.
Yes, please.
So also, just kind of adding on to that and Tony's comment, the other thing too is, and I hate to be specific on Colville tribes, but that's, you know, kind of why I'm here, but we also have mitigation data for the Colville Indian Reservation. We actually have 2 LiDAR flights under our belt. And so I think just being able to have that communication with insurance companies or the state of Washington in developing these requirements is also something we'd like to be considered our own fuels reduction and mitigation measures in that also. So I guess that's also bouncing off of Senator Short's comment that hopefully this isn't a one size fits all, but we can look at getting all this data together and what's best for the area. Thank you.
Thank you. Dan, can I check in with you if our technology is cooperating to get poll data?
Technology and I are not friends today. We
All
are
right.
still challenged with removing the settings that prevents all users to answer the poll. Still working on it.
Okay, thank you. Steve, let me come to you.
Thank you. I just, again, shift the focus a little bit and ask that while I know we're heavily focused on the individual property owners and property level insurance, I think the foundations we've talked about trying to incorporate local fire jurisdictions in the discussions, and again, that transparency of what makes the greatest impacts in the risk modeling, and thereby would hopefully provide the largest return on investment from those local fire jurisdictions or regional approaches, so that we will know how to target investment in whether it's suppression or prevention or community education, really, I guess, becoming stronger partners in that work so that we maximize our efforts and we don't send the mixed messages that I know we've talked about here before about feeling like we're empowering our local communities to do the right thing, and then having property owners who come back to us and are frustrated when they say we've tried to do or incorporate what was, what was articulated, and we're still getting either non-renewals or exponential increases in premium. So yeah, I would just love to have a greater conversation with the industry at large, I guess, on how we can maximize the influence there. And I know we've had some offline conversations about standing up some separate, maybe targeted work groups with insurance on that.
Thank you, Steve. It looks like Deanne fixed our poll. David fixed our poll, somebody. So please, you should see it now. You may need to click into the polls and quizzes option to be able to see the 4 questions. If you're still having trouble, please let us know. And while you're doing that, Kenton, let me hand to you.
Thanks, Kelly. Great discussion so far. Steve's question or Steve's comment just now reminded me of something I've heard offline in some of my discussions within the industry. I wanted to see if Juliana is on from Verisk to talk a little bit about how, if and how at least her company's models recognize mitigation work at the parcel level or community level, because I feel like I've heard that they actually do reflect they actually do reflect mitigation work that's been done, but it's not, I guess I'm not entirely clear on for sure how that occurs or how often that occurs or whether it occurs. So I wanted to see if it's possible for her to comment on that.
Thank you, Juliana.
Yeah, I'm here. Can you hear me?
Yes.
Yes, happy to reiterate that you are correct, Kenton, that both the wildfire risk scoring model, Fireline, and our wildfire catastrophe model account for parcel and community level mitigation. And so when those mitigations have occurred, some of it is captured in the model itself. Some of it has to be input in by the user of the model, which would be the insurance carrier. So they're able to input and update any data that they may have more granular insights into. But some of it, like I said, we have the ability to pre-fill some of that if we're able to capture that with our data sources. And they will demonstrate a demonstrable reduction in the score or the average annual loss, as the case may be, depending on which model we're talking about. So there is a reduction that is reflected by those. So it's definitely worth having the data and including it. We don't have all the data though, so that's another thing that's really important to recognize, that some of that is a function of just the inability to get it with our sources. But I think that there's been discussions, and I think this is really important, about the willingness of homeowners to share that data. And so if they want to be able to see a reflection of the risk reduction, then they have to share that with somebody. But it has to go to the carrier or to some sort of data source that would be accessible by the modelers. Does that answer your question?
Ken, does that answer your question?
Yeah, that's very helpful. And I think it points to something that we're kind of, we're talking about, but I'm not sure we focused on the right question. It seems to me, but at least based on Juliana's response, that transparency is what's necessary here, transparency and education, that these things, there are tools in place. And I know some of the comments that have come in say the industry should do X or Y or Z or what have you, but I can tell you that there are, about 100 companies writing homeowners insurance in Washington, and they don't all do the same thing. They don't act as a monolith. So it's important for us to, as we focus in on these points, to consider that there are competitive companies out there, each trying to, peel the onion in their own unique way. And they're going to respond to these things in their own way as well. So if we have a basic understanding that what information is gathered, how it's gathered, whether it's accurate, and then create transparency around those facts, that is a big step toward informing property owners what mitigations work, why the Wildfire Prepared Home Standard as an example, or FireWise or what have you, are important elements to ensure or better ensure the availability of insurance coverage for their property. And I'm concerned that if we don't have those basic understandings among all of us about what actually exists now and how it works now, then we might make decisions about recommendations that aren't based in actually, they assume things that aren't in evidence. So I wanted to make sure that we had that out there. So that's kind of a long rambling way of saying, yes, thank you, Julian. I appreciate you.
Well,
Thank you.
and one other thing that I forgot to mention is that there is also the ability to correct the data. So that's something that we've had long in place. That's not something that we just developed because, you know, some state told us to, but we definitely allow for you know, revisiting. If a homeowner thinks that their data may be inaccurate or outdated, they do have to do it through the carrier. And I think that's one thing too that's important to recognize. I'm not going to speak on behalf of all of the modelers, but I believe that the business model is similar. We are a business to business solution. So our customers are the insurance carriers. And so we do work with the carriers when they feel that potentially their policyholders' data may not be accurately reflected, and we can make amendments and corrections if need be. So I wanted to make sure that's clear also.
Thank you. Tony, I'm coming to you in just a moment. If anyone else wants to put their comments into the poll, we're going to leave that open for about 30 seconds more, and then Deanne's going to close that for us and share the results with everybody. Tony, see you.
Thank you, Julian. For the past 7 years, I've been searching for how to influence the data. So nobody really at the ground level, at the practitioner level, was aware of how these things work. We would talk to the carrier, and the carrier would just come out and say, nope, we were right, and not provide any of that data transparency that would allow me to take actions to make the changes. And so I think, as Kenton talked about, really having that data, I forgot the last part of the name, but the data storage area, and where the practitioners, I myself and the rest of the community resilience group in the state of Washington can input data at that level while seeing the data that's above that the companies are using and carriers. But at least we know we could have an influence in what is going up and trying to make changes from the ground level. I think it's kind of important because I went through this once at Sunkidia, did a nice little Firewise project, thinned things down 200 feet from the property line, and it came back as high risk still. And other areas I'd done mastication, tree removal, still showed under the large, I can't remember whose data system, risk analysis it was, but it was still high risk. And I didn't know how to influence that. So I think that's an important thing that we need to bring down is how do we influence the ground data that's going on, because we're generally working off of satellite data and large scale fire analysis, which is it's good for planning, but never for doing projects. You need to go out and actually on the ground, look at things and go, yes, the model was right here, or no, the model was wrong here. And I'm going to shut up now.
Thank you. You should all now be able to see the poll results. Can you give me a thumbs up if you can? Oh, good. Thank you. All right. So I'm going to give you a moment to look at those. And Kat Robinson, let me hand to you.
Thanks. My name is Kat Robinson. I'm the Wildfire Mitigation Specialist and Emergency Coordinator at Eastside Fire and Rescue. Thank you for inviting me to be here today. And really, Tony kind of said what I was going to say for the most part, but I will add on to it a little bit in that I think a little bit earlier there was discussion of homeowners being willing to share information and data, from these home hardening assessments. And as somebody who is out in the field doing these assessments and talking to homeowners, I can tell you they have a lot of concern about anybody knowing the information that I'm collecting beyond between the two of us. And I make it a point to, to let them know that this information is not being shared. And that comes from their, to them, a lot of how the insurance industry is making these decisions is a mystery. It's confusing to them and sometimes it doesn't make sense. So they'll call me out, and I think I've heard people say similarly, and they'll say, well, I was told that there's a tree over my house, and there's no tree. It's a shadow or something like that, but they can't get anybody to listen. They say, can you do this report? And then I can tell them that there's not tree. And I like, well, you can show it to them. I don't know how much impact it has. I've been trained with, NFPA standards and IBHS and CAL FIRE. I have all of the background that I need to make these assessments, but it doesn't necessarily, beyond them implementing those changes. And, we can see from the research, making those changes does improve your home's survivability. But if it's not impacting your insurance, there's a bit of a disconnect and a frustration for homeowners. So I think an important part of what this group and everybody involved in this needs to consider is, how do we build that transparency and trust? What does that actually look like, that a homeowner would be willing, that actually the end result is a homeowner saying, please share this information. I want my information included.
Thank you. Juliana.
Thank you. I think that was a perfect segue into what I wanted to point out. And I think there was a comment in the chat about this. There's an understanding, and I wanted to say that, as modelers, we're all insurance consumers as well. So these things resonate. We understand this, the idea that insurance consumers want and need to ensure that their data is correct and understand what would make a difference. One of the things that I think is really important to distinguish about the transparency piece is the part that is intellectual property that, to be quite frank, is really only of interest to other competing modelers. It doesn't actually assist a consumer with an understanding of what is maybe impacting their score or their risk. And so one of the sort of challenges that we've had in many states, including Washington, is that the current laws regarding transparency of the use of models would require the disclosure of intellectual property. And as we've just seen recently, Dr. Gelman mentioned that Verisk was the first to make it through the California PRID process, where there was a very deep dive by the regulators into the models themselves and looking at the very deep, intellectual property pieces that are challenging for modelers to disclose publicly, and then ended up resulting in the documentation that the model advisor believes should be made public to the consumers and consumer groups. And that process was very rigorous, and it took about 6 months, and it went very well. And we reached a mutually agreeable conclusion. The model documentation that we are making public, and I would like to point out, we're actually proactively making it public. It's available on our website already. That is the documentation that consumers could take a look at. And that sort of process is something that we at Verisk are very agreeable to. And so I just wanted to point that out, that there's a difference between making the data transparent and making the intellectual property, that's sort of the inner workings of the models, transparent. And right now in Washington, that remains a challenge for then carriers to use models like ours.
Thank you. Dr. Gelman.
Yeah, I just had a question for Juliana. So, I think you know more than I do about this, but it's my understanding that consumers can ask their insurer to look up their CoreLogic risk score. You should correct me if I'm wrong about that. But my question for you is, are consumers in any way going to, in California, have access to their modeled risk? So if they go to their insurer, are they allowed to, in California, ask, hey, what is my, average annual loss, or what are my expected annual losses? or what is my expected probability of parcel destruction? Do they have access to that kind of information under the ongoing rule changes in California?
That's a great question, actually. And I, again, that would be something that the insurance carrier certainly would have access to. And I don't believe, don't quote me on this, but I don't believe there's anything under the current framework that would require the carrier to provide that to their insured. So you're talking about the results coming from a catastrophe model versus a wildfire risk score, right?
Correct.
And so, yes. So I don't believe that that's part of the framework. But again, like I said, don't quote me on that. I don't know if I've read every single word of that regulation.
It's hard to keep up. Well, and so just kind of on that point, I put this in the chat. To me, and if people have disagreeing opinions, I would be really interested to hear them. But to me, it seems reasonable for a consumer to be able to find out their personal risk score or their personal expected annual losses, because that does not require disclosing the whole under the hood guts of a trade secret model, but it allows for consumer access to information about their own risk. And I agreed too with Michael DeLong's point about simplicity in consumer communication. So I think something like a risk score is easily understandable by homeowners. Just my thoughts.
Thank you. Okay, I want to see if anybody has any comments on the poll, which you should still be able to see the results for. There's lots of agreement in there, but is there anything anybody wants to say about that? Okay. Let's go then to our next question for you, and I'm going to read it to you and put it into the chat in case that helps. Is there a certain level of transparency, data availability of wildfire hazard and risk needed for consumers to proactively mitigate their wildfire risk? Feel free to come off of mute or put something in the chat on this. And Lauren T, also, if you want to share anything else on this point, please do.
Not this time, Kelly, I don't think.
Okay. The question, Tony, is I typed it into the chat. If we're inviting, if anybody has any comments, is there a certain level of transparency, data availability of wildfire hazard and risk needed for consumers to proactively mitigate their wildfire risk? Yes, David, please.
Yeah, just for clarity too, I think we've been hearing a couple of these items, and so I think we're just trying to find some clarification. We heard Tony's need of wanting to know about flame links, BTU, and really technical stuff. But what about just a property owner? What are some of the things Dr. Gelman mentioned? Their score. Is there anything else besides just the score? The range of scores, who the company is, the appeal process, steps. What are a couple of steps that they can do to help the score? I think we're just trying to get some input of like, what are the things, if we are being transparent, that's actually useful for the consumer?
Thank you for adding that clarity. Got a couple good points in the chat, and Tony, over to you.
So the score, like the Verisk scores or the CoreLogic score, all provide decent information for the homeowner, but we're not discussing the mitigations that matter currently. And so generally along with that is a checklist of potential things that could make a difference. I just had a homeowner that for some reason their insurance carrier wanted them to have all grass within 100 feet of the home, less than 6 inches, which means he would have to be cutting grass on 4 other properties, and grass beyond 15 feet does not matter from a fire perspective, fire behavior perspective. And so part of why I point to the needing the technical data and other information is Jennifer pointed out, and Kat also, is they are always calling people like me or Jennifer or Kat, and we're out there trying to help them do things, and we don't know why they're making the suggestions that they're making. Because sometimes those suggestions do not make sense, i.e., grass shorter than 6 inches for 100 feet around the property. And so the court, we're dealing with two different levels. We're trying to inform the homeowner, but then we also need to be able to provide enough information that the people who are coming out to help the homeowner, because as I said, this year I'm going to talk to well over 100 homeowners, and I am attempting to help them firewise their places. And I'm using my 30+ years of fire to make those recommendations, just for the insurance companies to come back and go, yeah, you don't know what you're doing.
Thank you. Chandra.
So I think I was going to say one thing, but then Tony made me think about something else. But anyway, I think one of the issues is that we need to keep in mind, and maybe this is too far down in the weeds for today, but people receive information differently, they process information differently. And so whether it is a checklist that we're providing, or whether it is an interactive tool on OIC's website that lets people play around with choices they make on their properties to see what that does to their scores, or something like that. But I think Tony's point is it just goes back to the purpose of this work group is we need to come up with that standardized language for the state of Washington, so that when Tony and our other fire practitioners are going out and meeting with homeowners, they're working with the same specifications that OIC is using when they're talking to our carriers. So I think that just reiterates the importance of what the work group is doing.
Thank you. Michael.
Yeah, Michael DeLong with the Consumer Federation of America. All good points. Also just wanted to say that we need additional transparency from insurance companies. And I understand that there's a lot of data and a lot of things that go into the various models and scores and other such things, and not all of that can be made public and other stuff. But we need transparency and at least some understanding, both for policymakers and regulators, and even like general consumers and consumer advocates, of like what is going into the various scores, and why people are getting like these massive premium hikes and other such things, because often it seems to be very arbitrary. And we understand that the insurance industry plays an important role and does a lot of good things, but saying we can't comment on individual cases or other such things is no longer cutting it, in our opinion, because we've heard a lot of unfair cases. We're seeing a lot. We need a lot more sort of transparency and other things. And consumer advocates and consumers are tired of being like sort of, honestly, to be blunt, jerked around a lot of the time. They feel like they're paying these premiums, they're doing everything right, and then they're not getting anything for it. And even often, if they undertake mitigation efforts, they then still see their premiums hiked up, which is, again, well, I'm getting ahead of myself, but also we think that insurance companies should have to give rate reductions or premium discounts to people who undertake those mitigation measures. Sorry, did not mean to speechify.
Thank you. Senator Sharp.
Thanks so much. I agree with everything the last three folks had to say. And I think fundamentally, to get back to the individual thing, a lot of individuals get notices that they had no idea were even a thing. Some of them are notices just, with the insurance going away, and they have mortgages on their property, right? And the other thing, or their rates have gone just sky high, and they're being asked to do things that they can't even do. I.e., I have a constituent in one of my northern counties who said, well, you need to take care of those trees. They're less than 100 feet from your property. He said, but those are on my neighbor's property. So it's that kind of thing. So to get back to, I like the checklist idea. And I like, people need to have notice about what's preventing them from getting insurance or why those premiums have gone so high. And I think a checklist, as well as all of the informational, interactive things that you talked about, are really, really important for consumers, to know about what do they even undertake. And then at some point, and I agree, insurers, I mean, they provide an important product and for the reasons that we have them, right? But I also think they have responsibility that if things are undertaken, that there needs to be, well, what do homeowners get for that? If they're, I mean, obviously we all want to protect our properties. We don't want to lose our properties from wildfire or any kind of disaster. But I think, there's a few folks who've said kind of the playing games, and I happen to agree as well. I think if the expectation is we're going to come in and do these things as property owners, as a state or a local community, then I think there needs to be, some really hard discussion with the insurers to say, what from their standpoint really makes that difference. And I think a checklist is a great way for homeowners to be able to decide what they can do. So.
Thank you. Robin.
Hi, thanks, Kelly. I just wanted to raise the point on, this with transparency and communication and just the public understanding. I just wanted to raise the point, it's been brought up in previous meetings, but we have the 6120 hazard and risk mapping effort that DNR is undertaking. And so I just want to flag this for this group. I don't have an answer to this right now, but I just see the potential for hazard and risk map, to be out there, and then homeowners saying, well, I'm in this area on DNR's hazard and risk map, and I'm not in a high risk area.
Mm-hmm. Robin, you're freezing a little bit.
Why is my just being mindful that these different resources are going to be out there, and how we message those. Sorry, my internet may have caused some
It could be on my
there.
side. Thank you. Let's see, Kenton Bryan.
Thank you, Kenton Bryan, Northwest Insurance Council. So I have a lot of things on my mind about some of the comments that we've heard. I think it's important to take a step back and consider a couple things. One, the establishment through the Insurance Institute for Business and Home Safety of the Wildfire Prepared Home, Wildfire Prepared Plus, and Wildfire Community Prepared Community standards is the first step in a industry recognized standard for what mitigations that matter means. There are a few of these homes that have been built in California. There is maybe one or two in Oregon, and I don't know if there are any in Washington yet. Insurance pricing is based on what insurers are paying out in losses. Those costs have dramatically increased since 2019, and premiums reflect the fact that insurers have paid out larger sums of money to repair and replace properties, cars, et cetera, over the last few years, due in part to climate change related natural disasters, and just due in part to the fact that all these things cost a lot more, and the costs and inflation in those areas went up significantly higher than the rest of inflation, except for maybe eggs. So what we're seeing as a result is insurers are raising the cost of insurance on insureds, and that's a reflection of losses. So it's important for us to keep this in mind, because there's, as I hear people say, if we're going to make homeowners do this stuff, then they ought to get a premium discount, or they ought to pay less for their insurance. Those things will occur through the marketplace as we provide or ensure that there's a stable and healthy environment for insurance companies in which to operate. And if you arbitrarily say we're going to require insurers to do X, Y, or Z in terms of premium, it's ignoring, and in fact, I think the insurance commissioner's office will probably, hopefully, agree with me on this. Insurers have to actuarially justify their premiums, and they have to actuarially justify any premium discounts. So we have to prove that there are fewer losses related to the implementation of these programs before we get to offer premium discounts to people based on those changes in loss rates. So I think it's really important for us to keep those factors in mind as we consider that maybe the first thing we ought to focus on is the availability of coverage by the stability of the market that's based on implementation of either mitigation grant programs or other efforts to encourage property owners to take mitigation actions. It doesn't mean every property owner who takes that mitigation action won't have a negative outcome regardless, because not every insurer wants to insure every property everywhere all the time. So it's just important for us to keep those things in mind as we consider all these things. I just want to say one last thing, because I know we're running short on time, and that is some of this work is being done or has already been done in some other states. I would encourage us to talk more about some of the transparency things that have been put in place in Oregon that encourage insurers to provide information, stopping short of including a lot of mandates on insurers. So more on that at a future meeting. Thanks.
Thank you. David, let me come to you because I am aware of our time. What else do you want us to talk about relative to Part D of this recommendation?
Well, I think we can move on to C, but some of the things that Kenton mentioned, just some data for the work group members. When Kenton's talking about the cost of insurance as it relates to the cost of claims, 2019 homeowners policies claims in Washington State were $950 million for that year. 2024, they were about 2.2 billion. And that's, I think, what Kenton's referencing as we talk about, we haven't had more homeowner claims in that time. We have about the same number, even some years less than 2019, but it's the severity of the damage cost in the claims that has caused a real increase in the premiums over the years. Kenton also mentioned what it takes to receive a discount in Washington. It's the same for every discount, just like you would have a smoke alarm, fire extinguisher, security system. There's really two things. One, that the company has to show that the mitigation reduces claim costs. That's how it's a discount and not a subsidy of other premium holders. And then it can fairly apply it to any consumer that does the mitigation work. So those are really the two things. And I just wanted to give a little bit more context about what Kenton was saying. I hear a lot of crossover from C, so we should probably go to C.
Yeah, let's go to C. And we knew that. I should have said that at the beginning, that we know the 5 pieces are not entirely mutually exclusive. So I'm going to paste the text from C in, and Lauren Burns, you for any context that's helpful here.
Awesome, thank you. I'm going to share screen. And now we are taking, hopefully, a look at our meeting notes from July 22nd. Let me see if I can blow this up a little bit. There we go.
Yep,
okay,
we see it.
Wonderful. So again, you can find all of this information on our work group webpage. I'll paste that in the chat after I'm done rolling through our common themes and challenges identified. And I'll just read this section. We received about, I think, 7 comments for this particular survey. So this is just a summary of that feedback. Around recruitment, retention, and funding challenges in rural fire services, there was persistent staffing shortages in rural volunteer departments, funding constraints tied to property tax laws and reduced federal state budgets, and need for sustainable models for transitioning from volunteer to paid staffing. Around insurance industry concerns and frustrations, there's feedback around widespread frustration with wildfire insurance practices, pre-fire non-renewals with minimal explanation, post-fire claim difficulties and sharp premium hikes, non-renewals even after properties are rebuilt with fire-resistant materials, doubts about whether mitigation efforts actually influence insurability, calls for more transparency and accountability from insurers, comments related to call for better risk modeling and public transparency. We received feedback, criticism of private risk scoring models for ignoring local fire district capabilities. There was support for state mandated transparent wildfire scoring systems with an appeals process. There was interest in integrating public GIS and wildfire risk maps for more reliable local planning and insurance assessments. Related to wildfire mitigation and risk communication, there was strong demand for public education on wildfire risk and mitigation. There were questions about how to quantify and incentivize effective mitigation measures, and concern over the intensity and unpredictability of wildfires, including how mitigation materials fare under extreme heat. We received comments related to GIS and data integration as critical tools. There's positive feedback on the use of GIS for wildfire risk planning and smoke impact tracking. There was interest in leveraging GIS across agencies, including with insurance and DNR data. Suggestions to use GIS to support statewide standardized wildfire resilience efforts. And we've received some comments on health and environmental impact of smoke pollution. There was recognition of wildfire smoke as a major public health risk, particularly in vulnerable communities. There were concerns about healthcare system burden and gaps in health insurance coverage for smoke-related issues. And there was interest in differentiating between natural and structural fire smoke exposure. On the topic of policy code and regulatory alignment, there was desire for alignment of local, state, and insurance regulations on wildfire resilience. There was interest in using recent changes in planning law, like the Growth Management Act resilience element, to drive community-level preparedness. And there were questions about how building codes, particularly for older structures, impact wildfire survivability. And lastly, there was skepticism around private sector influence. There was concern shared that risk analysis companies and insurers prioritize profit over public safety and transparency, and some skepticism that existing fire modeling or mitigation incentives adequately reflect the on-the-ground realities of fire-prone communities. So I'll pause there and stop sharing and hand it back.
Thank you so much. Just as we did for section D, we would love for you to put into chat, what do you most want to see in the recommendations specific to section C? And I have pasted C in just a little bit above in the chat. If you are a work group member, of course you can see this. And for any attendees, we will put this chat into the work group website, so you'll be able to see it later. All right, we have a few comments in here. I think some of them might still be about C or other things we've heard. Is there anything specific to part C? Maybe you are still typing what you think is important to have in the recommendation. Is there anything anyone wants to share thinking about this section C request. Please, Kenton.
I talk faster than I type, so I'll try to put something in the chat. But I guess I wanted to say that in this area, what strikes me are a couple things that we've talked about a little bit around the edges of, but this coordination of communication and the information that's provided, it seems to me, and I have said this repeatedly, I said it recently to David in a conversation, but I've also said it for about 10 years. We need to, in my view, settle on language around mitigation that is the same, regardless of where it comes from. So if Firewise has one standard for what constitutes defensible space that's the same or even slightly different from Wildfire Prepared Home, or if those don't exactly correlate with what DNR says in its Wildfire Ready Neighbors program, that reflects a lack of coordination among those various, all well-intended and good in their own way. There also may be differences in how, as someone pointed out earlier, how people receive information. So somehow trying to coordinate when we have, which I think we're approaching, a really good basic understanding of what mitigations do matter and in what order they should be undertaken, depending on the region and the weather and the type of property and the structures that are on it, then there should be some coordinated effort to have communications about those things that are the same, regardless of what entity is providing the information to the property owner. And I also agree with earlier comments from a lot of folks about the simplicity of that information and why it's so critically important to keep it simple so people understand what are the first things they should do, in what order should these things be done, especially as we consider equity for people on the edges of the economic and social stratus. It's difficult for everyone to do the same thing in every space all the time. So I think all those things have to be coordinated. And that is what I think the state can play a really key role in that because of the information they have available. As we've heard from various state agencies presenting here, there must be a way for those smart people to come together and let's try to coordinate the information and then provide a simple roadmap for people to follow in various parts of the state.
Thank you. I'm going to put a few different questions around this data discussion into the chat. And Tony will go to you, and then others might have comments on one or more of the questions that I've pasted into chat. Tony, what do you want to add around C?
I think Kenton pointed out all the different groups that do Firewise, and one of the things that needs to be considered is, I've been saying this for a number of years, Firewise USA is awesome if you own 5 acres plus, but if you're on 1/3 of an acre, you need different standards, because if you're out in the middle of the woods and it's nothing but contiguous forest that's fairly dense, we need to reduce the probability of crown fire. But then if you're in a more sparsely area or more populated area, you might have a clump of trees. That's not going to cause a crown fire issue if it's 30 feet from your house, because only those 10 trees can burn. And so I think that's one of the challenges we're going to have. And then just also to point out, because most of the practitioners already kind of work within an agreed guidelines already. The inspectors, the only ones who are kind of different are the ones who are doing working for the insurance companies. But I'm fairly sure that the 0 to 5 IHBS stuff, almost Wildfire Ready Neighbors are all exactly the same, because we are all looking at the data coming out of California, and they said, hey, if you got 0 to 5, your house has 40+% chance of surviving. And so we all kind of move that way. Where the challenge comes is more into the landscaping realm. Some bushes are a threat, some aren't. And I'll be done at that point.
Thank you. Other responses to the questions, either that I've put in here or someone else's comment or something just generally if you scroll back up and you look at the Part C request. David, where do you want us to go from here?
Well, I think the data repository, whatever we want to call it, I think we've heard it referenced other ways as a WUI data commons. There seems to be a missing element of local activity being readily available to modelers, insurance companies, and as Juliana mentioned, there is a pathway if the consumer was to give the information to the company, and then the company give it to the modeler to change that specific site. But is that siloed? And maybe, but then you also have the concern that we heard from Kat that property owners may not want to have physical description of their property, even though it's on tax assessments, roofs and things like that. But maybe this certain level of mitigation may not want to be publicly available. So, I'm trying to look at C and try to figure out. I think it's pretty easy for us to work with inside state government, our fellow agencies, DNR, Emergency Management Division, as Joanne showed us, the WATEC platform where we're able to collaborate our data sets together. However, should local fire districts have access to it? Should there be ways for other practitioners to have access to it? I think this is a kind of a common obstacle in many states of how do we get the local efforts recognized by the larger entities that are placing risk on their property, and something that can be updated, not annually, but quarterly, monthly, because folks and wildfire mitigation is not a static thing. And so how do the modelers recognize the risk? How do the insurance companies recognize the risk? How does local fire districts know what's happening in their community? Should there be a central repository of that information?
Let's see, Hillary, you had your hand up, but it went down. I'm not sure if you wanted to speak.
Yeah, sorry about that. I was just trying to, I was playing around with chat as I'm losing my voice today. And there are pilot sites within the US that are looking at these types of, I guess, pathways for landowners to contribute. I am working on a project in Washington. I won't go into a lot of details, but anyways, there's a possibility of, in a couple of other states, they're using QR codes to assign to each landowner, and then the landowners can enter the information into the system, update that information as the mitigation work is done, the model is rerun, and then but they're looking at homes, not wildfire risk scores per se, but they're looking at home survivability and vulnerability scores, which is a different kind of subset of data. With that, after the model is run, they're then working with and I don't know the right terminology here, an insurance liaison, who is then able to take that information and be like, look, this homeowner, this landowner, they have done these specific actions that were recommended by the model. And then they're renegotiating their insurance renewals with companies because they're able to demonstrate and show that home survivability has changed based on those mitigation actions. So, anyways, I think there are definitely pathways. I see a lot of folks putting comments about a portal and dashboard. I'm happy to share examples of that kind of offline or put you in contact with other places that are doing this work in different states.
Thank you. Any other comments? C. Brian, over to you.
Hey, good morning. Appreciate the comments that are out there, and I'm not too certain I have a lot to offer in terms of the answers to these specific questions, but just one thing to note around the portals is the experience of what happened with the wildfire risk maps in Oregon. I know that that was a very large undertaking that it didn't necessarily have any alignment to the insurance industry, but there was a lot of concern that it did. And I believe that they were repealed entirely this last legislative session, just given the sort of privacy concerns that existed around there and disagreement with where the data was coming from. So that'd be one thing that I'd caution just as we consider what this looks like. Another item to also consider is just in terms of a homeowner doing mitigation and the privacy concerns that might be out there that I know we've heard from multiple folks, knowing that there's a potential, that their insurer is their insurer, there's privacy provisions that are in their policies that can protect them. And I think that's something that we consider here. If they're doing a mitigation effort, something an insurer can update with their modeler to potentially take that mitigation into account, but doesn't necessarily have to be reported on a statewide basis or whatever it might be that concerns the property owner might be a consideration for us.
Thank you. Kenton.
Oh my, I'm busy today. So a couple of the comments in the chat, and thank you, Brian, for your comments as well. A couple of comments in the chat go to this issue of consumer concern about how much information insurers have and with respect to what might be done to them. And I think if we go back to the presentation from Dr. Gelman, one of the things that was on one of the slides was basically an assertion or some data that suggests that insurers operate better in environments where they have more information, not less. So I get it. There is a disconnect here between how insurance actually works, how insurers actually consider information and the benefits it provides to consumers versus what people think will happen when insurers have more information. On the auto side, we don't like legislation that masks information in your driving record, because driving record is one of the ways in which we determine how safe you are as a driver and your likelihood of having a claim. On the property side, knowing more information about what your property actually looks like and its actual risk of burning down in a fire, whether it's because it's your trees or your neighbor's trees, is important for insurers to know and benefits the overall health and stability of the industry, because we have more information about how we can appropriately rate risk. Insurers don't like it when they don't know what the outcome is going to be from a particular event. When we can predict the outcome better, we're more able to price that risk and write the coverage. It doesn't work when you take those things away. So I want to, I guess, argue that understanding that there's a disconnect between what is actually happening and what these benefits are versus what people think they are going to be is something we have to figure out a way to manage. But one thing this group ought to be able to do is understand the value of having more information and work on ways to help people understand why it's good to have more information and not less. I'll speak briefly about the Oregon experience, which I've lived through because I work in Oregon. The wildfire risk map resulted, ironically, in pitchforks and torches being brought to the Capitol because people believe things about it that were not accurate, including that insurers used the map to raise people's rates. None of that was true. Insurers have never used the wildfire risk map in Oregon. They never looked at it. It just coincided to come out, the first edition of it, at a time when post wildfire in Oregon, insurance premiums were going up. So anyway, we have a lot of work to do on educating consumers. There's no question about that. But reducing the amount of information or limiting access to it for insurers is not going to help consumers in the long run.
Helps if I come off of mute. Thank you, Kenton. And I have one final question. as we are coming to the end of our time today, what is the burden or responsibilities in wildfire mitigation for the federal government, state government, local government, insurance industry, building industry, NGOs, and property owners? You can speak up. You could also put your comments into chat if you prefer. Michael.
Michael DeLong from the Consumer Federation of America. I'll just start by saying that one of the responsibilities in wildfire mitigation for the state government should be the establishment of the grant mitigation program with an amount. An amount should be decided that is reasonable for homeowners and that enables them to do some mitigation improvements that aren't, so they aren't left hanging, like they get the funds and the project is like partly completed or something like that. Ideally, the federal government, I think, would step in and also contribute, but I do not think, unfortunately, that is likely to happen anytime soon. And second, for the mitigation program, it needs to be adequately funded so that ideally, we think anyone whose home is at risk, especially in Eastern Washington, can get it. There were some cases in Louisiana, which has a mitigation grant program recently, but it's relatively small and underfunded. And at the current rate, I think, I don't remember the exact details, but it was something like it would take until 2050 for about 1/4 of all the homes to be hardened against hurricanes and wildfires, which is a process that is way, way too slow. And we want Washington State to move a lot faster than that.
Thank you. Good comments in the chat. And Tony.
So the first question that needs to be asked to try to answer that question is, how many homes do we have to protect? And considering the number of homes we're going to have to try to protect, the number is going to be really, really big. So this is going to be a long process in the first place. We can do some simple things to make all new construction apply to whatever code. And as stock rolls over, we'll move for get further along. But the other aspect that everybody talked about is, in a city such as the ones I live in, Rawls and Clayholm, Rawls, South Clayholm, you know, we've got about 20-foot setbacks between homes. One home goes, yeah, that whole entire block's going and probably half the town. So we need to look at this as potentially, rather than shotgunning money, or as I call it in the landscape forestry level, rather than postage stamping, we need to look at identifying, say, county. I'm just making things up at this point, but targeting and moving them to all where they're in a relatively safe spot. Because if we just do a home here and a home there, is that going to actually make a difference within the communities that are currently threatened? And as we talked earlier, our biggest problem in preventing wildland fire is we don't know when and we don't know where. And so no matter what we do, we're always going to do something in the wrong spot because the fire is going to show up in the other spot. And I'm done again.
Thank you. David, is there anything I've missed that you want us to talk about before we wrap up today?
I don't think so. I think we're seeing some chat still roll in. If anybody wants to come off mute and voice it, that'd be great. But as we head towards August 19th, please come ready to be prepared to speak about subsections A, B, and E, and they kind of all related to a nationally recognized science-based mitigation standards. There was an S there. I think that's on purpose. And then how to enhance our community mitigation efforts that are doing great work already underway, and then what a grant program to help the property insurance market could look like. You've heard a couple different examples that are being done. California is piloting something there. We have about a dozen other states that use IBHS platform to do wind mitigation. They are coming online with wildfire mitigation. And those programs have shown that they're effective at, over time, reducing property loss, which will change the state's insurance market. So become ready to have those discussions. And when we get the opportunity at some point today or tomorrow, we will take the chat that we've gathered today and add it to today's meeting on your work group webpage. So you can, anyone that's unable to view it, that's an attendee or watching on TVW, can go through and look at it.
Thank you, David, for all of that. Juliana, you had your hand up, but then you took it down. Do you still want to share?
Well, I was just going to say, it was sort of piggybacking on what I had said in the chat about the opportunity for creative solutions. And I mentioned this just because there's a couple of different policy groups that I sit on and listen to in talking about sort of how to deal with this, and how all of these stakeholder groups, including the insurance industry, have a role to play in being creative with how to fund these efforts, and a couple of different options. And I can't remember if I mentioned this when I presented on the 15th, but one of the things that Verisk ISO is getting ready to do is to roll out a coverage option where insurers could offer their policyholders at a premium the ability to rebuild following any sort of damage or destruction to their home. It doesn't have to be just from a wildfire, that then they could rebuild to a more resilient standard, even if the building codes don't require that. And so insurance carriers already have building code upgrade coverage that's generally part of a homeowner's policy, but this would be something that would be additional. And so we, as modelers, and we provide these forums, and we're trying to think of creative ways to contribute to this issue. But I think there's other options that all of these stakeholders can think about. One I heard actually APC brought up was a proposal that mortgage lenders were considering, that at change of ownership, there would be potentially the opportunity to offer an additional loan or some sort of a something through the purchase process to offer more money to retrofit a home that's already been built. So there's certain things that can be done across the board, that just, it's all working together, that I think I just wanted to mention a couple of those solutions that had been brought up at other policy meetings I've been involved in.
Thank you. All right, I think we will wrap up there. Thank you everyone for all of your comments in the chat. Reiterating what David said, we have no meeting next week. We will meet you again on the 19th to talk about sections A, B, and E from the legislation. And there is also no survey for today. So we will again invite your comments next time. Thank you so much, and appreciate all of your input today. Have a good rest of your day. All right, Deanne, can we stop our recording?